Well, hello, active traders, and welcome to Breakout Trading Success Secrets 2020. I'm Ken Calhoun. I'm joined by my longtime colleague and valued friend and mentor, Harry Boxer, the world's top stock picker. He's a brilliant guy. He's founder of www.thetechtrader.com. He's a 45-year veteran technical analyst and stock picker, and a kick-ass guy who knows what he's talking about. He's the best of the group out there. He's author of Profitable Day in Swing Trading. He's been featured at Money Show Traders Expos, TheStreet.com, CNBC, and Forbes. Harry, great to have you here with us today.
Thanks for having me, Ken. Always good to be with you. And I hate to say this, but you keep introducing me as having 45 years experience. It's actually 60 now. I just turned 70. I've turned 73. I've been doing it since I'm a kid. And I'd like to tell all the people out there that every time people say to me, well, how long did it take you to really perfect stuff? Believe it or not, 15 to 20 years is how long it took me to get it right. And I've been milking it for the last 40, so it's really nice to be able to tell everybody and teach people what basically I know. And you can see that I wrote a book called Profitable Day in Swing Trading it's basically about using price volume surges and pattern recognition to catch big moves in the stock market. And that goes for intraday on 1-minute charts as well as daily charts over a longer period of time. In my site, the Tech Trader, we do day trades and swing trades, and oftentimes we'll give you a pick during the day that turns into a swing, and that swing will turn into a long-term play. I can cite you many instances of 10 and 20-fold increases on stocks that we first put out as a day trade because we noticed a thrust coming out of a pattern that initiated a big move in the stock. You never know how far it's going to go when you first are looking at it. But just keep raising your stops and keep drawing your channels, and you'll be fine. So what I like to tell my people is that the way to be profitable in your day in swing trading is to, number one, be organized and focused. Problem in my site is that people are throwing ideas at me left and right, and I have to try to pick out what I think will look like the best picks. And every day you'll see 8, 10, 12 picks or more of stocks that are moving, surging, forming breakouts and doing consolidations, and end up being good day trades. What we do in the morning is we prepare for the trading session by analyzing patterns from the previous day, because some stocks that close strongly might be spillovers the next day. But my morning routine is basically, and what I'm looking for, is I'm looking for stocks that are gapping and spiking up 5, 10, 20%. I really want to see a big pop, and I want to see it on big pre-market volume that would blow away their normal daily trade volume as well. That's the kind of thrust that I want to see and the kind of money flow I want to see in stocks that are breaking out that could end up being, as I said, not only a successful day trade, but something much more than that over a period of the next 3 to 5 weeks, 3 to 5 months, even 3 to 5 years. Some of the stocks that I've given out 3 or 4 years ago in the 2-3 range, to give you a perfect example, Teladoc, which first gave out at $11 to some of my people, reached up 200 and change, and then was and today was acquired by LVGO. Not a very good performance for those 2 stocks today because of that deal. But the point being is that when you're focusing in the morning, you're looking at ideas. What I do is I publish a list for my people every morning before the market opens. We call it a focus list. And that focus list will consist of the stocks that I think have the best possibilities of strong day trades that day based on price volume surges, patterns, breakouts, things of that nature. I'll show you some examples of stocks from today that met those criteria. But before we get to that, I also want you to know that the key point is analyzing the early trend development. If you develop a disciplined, focused, organized approach and monitor the early price volume action closely, along with what I consider one of the most incredible indicators in Wall Street, it's called volume buzz by Warden Brothers, which shows you at any point in time a price percentage increase versus the average price percentage increase in the last 100 days. Anyway, so we create the focus list. There's what volume buzz is. Volume is basically, volume buzz shows you, compares and normalizes where stock is at that day compared to where it was in the previous 100 days. My favorite day trade pattern is something that moves up from lower left corner to upper right corner in a 45-degree angle parallel rising channel with strong relative volume. That is what I consider the best day trade pattern. And during the course of the session, I want to see low volume ebbs. When I see a stock consolidating, I want the volume to get really low. Let me show you some stuff from today. One moment. Okay. So Miles is a stock that exploded out of nowhere right after the opening. And literally, when a stock goes from $1.25 to $1.75, I usually don't trade it because we usually don't touch stocks under $2. But when it broke out of this coil and it did it on huge volume and got over 2, I put out a day trade at about 205. With about 25 minutes, it was 277. You got 70 cents that quickly on a $2 stock. It's a pretty good move. I took everybody out there. And I told them to don't get greedy with that one because it could pop and drop. And sure enough, look what it did the rest of the day. See, what we're looking for again is we're looking for these early patterns where a stock will pop and consolidate and then break out of that consolidation. That's usually an indicator, something that is going to be a good trade for us. Perfect example is TISI, Team Inc. Gapped, ran, pulled back, formed this little wedge, and right near the apex of that wedge, it got very quiet, almost stopped trading. That's what I call the low volume ebb. Just like when the tide goes out and stalls for a second before it comes back in, that is called ebb tide, right? And the same thing happens in stocks. When a stock is very quiet and it's a kind of a balance between buyers and sellers, and the volume gets very low and it stalls for a few seconds, and the little bars, the trading is very, very narrow, suddenly it pops. Right there when it popped, at about 465, I put out a day trade. 3 hours later, from 465, the stock was 575 for $1.10, or about a 30% pop in 3 hours. Now, I had a target as high as 590, didn't quite get there. When it rolled over, some of us were stopped out right there. So, worst case scenario, you were stopped out going down through 550, and you can see what it did the rest of the day. But what I'm looking for every morning is for stocks that explode, pull back, consolidate nicely, get very quiet, and then start to move again. Very high probability that that is going to trend, if not for the rest of the day, for the next few hours. DRIO, take a look. An explosive move from the get-go. Stalled for a bit and ran, and then had a falling wedge. At the apex of this falling wedge, it got very, very narrow and quiet. And when it popped right there, and then went across the moving average, that's where I put it out, at about 1633. Very quickly, ran to 18. That was a nice trade right there. $1.65 in minutes. During the rest of the course of the session, you can see it backed and filled and then eventually moved even higher, late in the day spiking up to 1872. But at no point in the day did it actually break any support levels other than here. Normally what I look for is for a prior low not to be taken out. So the disciplined trader might have been stopped out right there, unfortunately. And at some point, you may decide to go back in if it breaks back out again. But that's what happens in trading. You never know what you're going to get. Here's a perfect example of a stock that I didn't do anything on until midday. Why? Because it exploded pre-market and came down hard at the opening. After it stabilized for a bit, I said, keep an eye on the stock. If it should pop above this level, say above 72, 2.5 area, that's where I want to go in. So we did right there. When it broke out, it got up to 72 3/4, 73. And within 2.5 hours, 77 and my 45. My target was 77. A lot of us got out up in that range for 3.5 points. Look what happened to that after hours. That's why we don't hold stuff overnight, folks. People always ask me, well, can I hold this overnight? And my question to you is, did I give it to you as an overnight trade or a day trade? If you hold it overnight, it's on you, not on me. That's a risk you take, especially in Horizon, which had earnings today. And that's what happened there. Oh, not to mention a secondary. Stock of the day for me was Overstock. Take a look at this chart. Well, I mean, take a look. This is, by the way, the biggest percentage mover off the March lows, I believe, of any stock that I can follow. From 257 to today's high at 95. And that took 4.5 months. One of the biggest percentage gains I've ever seen in that short of time. Pretty impressive. And today it was a day trade. Here's why. It popped out sharply and formed an ascending bull coil. That pattern to me, and it's also a 1, 2, 3, 4, 5-wave consolidation. So this is basic Elliott wave stuff. 1, 2, and I'm looking for 3, 4, 5. So my target was about 91, 92 zone, which it hit right there. A lot of the traders in my room got out, which I tell them to do, because I'm a big believer that 5 waves into the lunch hour is an excellent time to sell a stock. And note that it did not break that pattern until there. So some of us got stopped out of that range, and of course it kept going. But if you were holding it all day, and by the way, even though this broke this low, it did not break this support zone right in there. And it worked its way back from a pullback low near 89 to 95.36 for another 6 points there. Pretty impressive move for Overstock today. But again, what we're looking for every day is a thrust from the get-go. Look at the volume cluster too. Bigger the volume, the better. This out to you. And let's go back. I want to show you how I do it when I'm teaching. I always go back to that point in time and show you what the chart looked like right there. That's a bull coil, and there is your pop. Look at the volume on the breakout there. And the pullback gave you an opportunity to buy it around 88, 88 and a half. It immediately popped back, consolidated for about an hour, half an hour. It broke out and kept running, eventually making it all the way up to 92 from that point, a good 5-6 point trade. I'm still in disbelief watching Tupperware do what this has done. In March, Tupperware stock got hammered down to $1.15. And here it is, tenfold in 4 months. Yeah, from $1.15 to $16.41. It's more than tenfold. And today, after coming down and testing the gap right there, snap back to resistance. But let's take a look at the intraday chart on a day trade basis. Note that today it opened up with a pop and then a wedge. And on top of the wedge, it formed a little flag. These are the kind of patterns you want to see in stocks that indicate bullish consolidations. Even after it popped here and pulled back, completing a mini 1, 2, 3, 4, 5-wave move, the second wave was a bullish flag. So we can call this a 1, 2, 3, 4, 5 wave, 1 and wave 2, and this is wave 3 and 4. I'm looking for this to be 16 tomorrow, unbelievably. Who the heck buys Tupperware? Yeah, do you have any Tupperware in your house? I don't think so.
Not since the 70s.
Yeah, exactly. And so I'm sure they're doing something else, but you know, it's a beautiful chart, and you can see how it never broke support, and even at the end of the day, it's still consolidating in a bull pattern. But we wrote it from the breakout point about 14.25 to 15.25, and got a point out of it that said bye-bye. It got up to 15.56. Here's a healthcare company, Tenet Healthcare. From the get-go, it exploded, pulled back. Notice the narrowing of the highs and lows. This is a perfectly bull coil right there. Low volume near the apex of it. There's a pop and breakout. I gave my traders a buy at about 28.35. And within 3 hours, it was 29.63. Not making you rich, but $1.25 for about 4 or 5%. And it didn't come down at all during the day. So in the course of the session, what I look for again is these kind of patterns, especially in the morning when they pop and coil, pop and flag, wedge, etc. A little company called Zag, which makes accessories for Apple iPhones. Check this out. This is like, again, when I'm looking for these patterns and I see them, I act. From the get-go, not a lot of volume, it popped and formed a wedge. Then it popped out here on volume, and that's where I gave it to my people, saying that, look, if this thing extends, we might see targets around 3 3/4 and 4 1/4. Well, it got right here to 375 exactly, and it went into a coil pattern, but that's still bullish. Then it broke out with volume and formed a little flag on low volume, very bullish. Then it exploded on heavy volume. When I saw that, I told everybody to exit. My target was 405, hit 416. I think it was actually 415. I have to check that, but here's the bottom line. A beautiful rising channel, never violated until it took that out right there, this level. This level was the prior high and the pullback low. Note that when it broke here, it came down hard, bounced, formed a little bear wedge, and it reversed the pattern. What you're looking for, folks, is on an up channel. When the stock's within an up channel, you want to see up on good volume, down on lower volume, up on good volume, down on lower volume, consolidating quietly near the apex, here, etc. Now, it also did it here and bounced, but notice that it bounced there, very low volume comparatively, and I knew it was losing momentum there. That's when it broke down. After a stock changes direction and forms these flags, they're bear flags. And sure enough, rolled over and got hammered before bouncing late in the day. Nevertheless, we rode this stock from there to there. Nice day trade. Another little biotech stock called Evoke. Notice the pop and the little wedge. Broke out. At about 4, I gave this as a scalp trade. It went up to 425, pulled back, and went up to 450, 444. So it was a nice trade from 4 to 440 for about 10%. Afternoon, it pulled down gently, and then late in the day, that one finished up 10% on 1.1 million shares. I always look, of course, at the daily chart because you want to glean where they're basically where the prior resistance was. And this spike high at 5 tells me there may be some resistance in the 495 zone. If it does get up there, that's going to be my next target for this stock, somewhere between 450, 60, and then 490 to 5. But we got to get some follow through, and this is the kind of stock I'll be watching for tomorrow. Late in the day today, we noticed that American Airlines suddenly jumped, and we went for a quick trade. I'll show you why. The 16 Republican senators were lobbying for a bill that would help the airlines with their salaries for their employees. And so this one took off. First exploded right there. Notice the big volume bar? 2 million shares in 2 minutes traded it, and then it formed this little, what we call a pennant. Look at the low volume ebb near the apex, that little bar. And then it popped. That's where we bought it. About 11.90, 95. Within 30 minutes, it was 12.85 for 90 cents. I told them not to get too greedy on this one. You never know what's going to reverse. It did come down and flatten out. All the airlines did that. You can look at Delta and UAL, all popped, and now they're all stepping back. And INO, which was a day trade as well. And this is basically about a dozen day trades today. Now, INO, the key is here that it had a little consolidation resistance zone, and it broke out right at midday. Formed a little coil, and I said, if that breaks out, we're going long. Broke out at 21.10, ran to 22.13 for $1, about 5%, and closed very well, up $1.50. So in a nutshell, there's about a dozen examples of the type of trades we look for every day. On swing trades, it's a little different, but it's more of a 15-minute chart type basis. I'll give you a few examples of that. Hold on a moment, I gotta pick something up here. Stay with me. Okay, so my swing table, and I want to show you some of the recent swings I put out. FCX, which I put out today, I'm giving you the heads up on that one. Look, this is Freeport McMoran, and when you see a stock has been a downtrend for a long time, and then have that V bottom, look at the rising channel. But more importantly, multiple tops that go back in here, all the way along here for the last 2 years, were broken today with the thrust of 36.7 million shares. So when the stock backed off midday, I gave a swing on it. It still looks like it's a buy in the zone. I think the price of copper along with gold and silver are going to go higher. I would look for this one to be run up in that 18 range. That's my target right now. I think Bitcoin's running, and I'm looking for GBTC, which just came out of an inverse head and shoulder. Here's your left shoulder, head, and right shoulder. Coming across key resistance today on 8 million shares. Didn't quite follow through the way I thought it might, but I still think it's a buy here. And I think the stock is headed for a retest. First at 17 and then at 20. Here's a thinly traded stock that I want everyone to keep an eye on. It's called Origin Agritech, or SEED. What they do is they make genetically modified seeds, and the Chinese government is about to approve it. You can see that the stock has run up in anticipation of this, but my opinion is that the pullback here is an opportunity. 16, 2022, and it might be a $30 stock in the next few weeks. Currently around 11. One of my favorite stocks this year was Wrap Technologies. Some of you know what they do. That's the bowler wrap that for police officers that envelops a perpetrator harmlessly without having to hit him with a taser or a club or whatever. What's going on now in the world? Everyone's looking at this in the LA Police Department today, and as I was told, voted in favor of purchasing it. So stock popped. Note, we were long in the stock in the 4-5 range, and it ran up to 14. On the current pullback, the three-wave corrective pullback right to the 50-day moving average and the trend line, I think stocks are buying here for a run up in that zone. Basically, it's the same stuff that I look for on a daily basis in this, which I use in the swing trades on 1 minute charts. So again, these are daily charts, and this would be a 1 minute chart intraday. You can see this morning, by the way, this was a day trade. I forgot to tell you about this one. Because I followed the stock closely when it popped and pulled back in that zone around the 10-15 range. I gave everyone a day trade with targets at 10.5 and 11. Well, it's exploded, went to 11.10, and then backed off. We reached our targets on that one too. An old staid, you wouldn't believe would be an interesting stock is U.S. Concrete. Take a look at this chart. And by the way, this stock traded 3 years ago at 83. And as recently as September of last year, it was trading in the mid-50s. Well, I got creamed in March, like everything did. And there's a 1-2 and there's a 3-4. I believe that wave 5, the fifth wave of a possible important move. If U.S. Concrete gets above 29, 34 and 42 are my targets, and it looks like it's about to do that. Today's action, very bullish. Popped out in the morning and consolidated all afternoon. I'm looking for more on that too. Now here's one that I hear is on the verge of doing some big stuff. Perion, working with Microsoft, exploded on earnings report and then pulled back. There was a seller there that we heard, an institutional seller that had to sell for whatever reason. Bottom line is they knocked it down from 6 and change down to here and reversed late in the day. I would keep my eyes on the stock. Here's your daily chart. It's coming through a triple top right there. And I'm a big believer you're going to see 7.5, 8, and then 9.5 in the next few weeks. See the volume on the upside today? Second biggest volume on an up day since way back here in January and February. So there's a sampling of the kind of things I look at every day. Now, Ken, since I only have about 7 or 8 minutes, I'd like to find out if anyone has any questions for me.
Let me, can I ask you, Harry, can I ask you a question?
Sure.
Yeah, I always learn a lot from you. You're one of my favorite 2 or 3 educators in the entire world. You're a rock star. You're a hero of mine. So you know your stuff. Most people out there are full of shit. You're not. You're like one of the genuine, if not the top stock picker out there. So I'm a huge personal fan of yours. Harry, let me ask you a question. I gave some thought to this because I do several thousand trades a year. Are you a fan trailing stops or hard stops? Do you use one or the other or both, or what's your take on how to manage stops for intraday trades, for day trades?
I think trailing stops are stupid. Why would you put a trailing stop in? Because you're afraid of losing XYZ. It's just like a friend of mine, and who's a great trader, used to trade 8%. If a stock goes below 8% from where he bought it, he's out. You can do what you want to do, but I put my stops underneath support. If a stock breaks the trend line, if it breaks the moving average, if it breaks the lateral price support, that's where I stop it. Any stock you can pick out, any stock.
Okay, that makes sense. Yeah, because I know we get these A-shaped midday reversals, right? So sometimes it'll run up all morning, then crap out and run down all afternoon, and that doesn't do me any good. So I use both, but I'm a hyperactive trader. I do both trailing and hard stops to protect against that. But it sounds like hard stops under support makes sense.
Ken, I want to point out that if you're talking day trading, that's a little different story. But I would have to say very hard stops on day trades because, for example, if this stock's during the day went underneath 1365, why would you want to hold it? The stock could continue to drift lower back to 13, then you're sitting with it. I am a big believer that on a day trade, buy the breakouts, sell the breakdowns. Most people will buy a stock when it's pulling back because they think it's cheap. I say the biggest money I ever made in my life is when I bought a stock at 11 and I ran to 17 and I bought more and I went to 37 and I bought more and I went to 47 and I bought more and I went to 70 and I bought my last tranche. I sold it all at 103.
Wow.
And the bottom line is that, and that took 6 weeks. That was on a daily basis, not an intraday.
Well,
The
that's
point
good.
being is that average up, not average down. Averaging down is for amateurs.
Okay, that's good to know. Makes sense. Yeah, yeah, I struggle with trailing versus hard stops. There are a couple other questions if you want to take. I don't know if you can see them or not. I can read them out loud if you want.
Here, go ahead.
Okay, question one from Greg wants to know what's the difference in your approach between day and swing trading. Well, there's probably a lot, but I don't know if you can be a little more specific. But anything jump out in the difference between maybe the charts that you select for day versus swing trades?
Here's what I do. When I do a swing trade, I go to a 15-minute chart. Why? Because it gives me about 3 weeks of chart data and a picture of through it, where it's been the last 3 weeks. If I see major resistance being broken, like it did here, that's why I put a swing on this one, because I think it can go up in that range. But
Yeah.
the point being, it's the same patterns on different time frames.
Okay, that makes sense.
I use the same moving average. And by the way, just so you know, I use a 10, 21, and 50-day moving averages. And on a 1-minute chart or a 15-minute chart, it's 10, 21, and 50 periods. That's all.
Okay.
And so
that's good to know. We got one last question here from Rolo. Hey, Rolo, how you doing, man? It's been a while. He's saying, Harry, on a day when a stock jumps at the open, rises, and then goes below the opening price, do you keep on the watch list or do you move on?
Well, okay, that's a good, great question. My big thing about breakouts is anytime a stock pops, I want to break out, and if it pulls back, you cannot let it get below the breakout point. In other words, you put a stop right there. Now, That's a long way, okay? But I usually wait for the stock to come out of that first consolidation. Now, some of my traders will look for like a 50% retrace and buy it, and then stop it down there if they take the quick loss. Or they'll buy it, and that's another thing I want to tell all you guys out there, gals. Never trade everything all at once. In other words, I don't believe that you have to buy. When you make a buy decision, why do you want to buy 5,000? Buy 2,000. Buy 1,500. It goes up, and you want to buy the pullback 1,500 there, then you're only stopping out 1,500 when you lose it. So you don't. If it breaks out, you buy another 1,500, and if it breaks above the prior highs, above there, you can buy another 1,500. Look at that did the rest of the day. That would have been a very good move, wouldn't it? And when you sell a little there, you sell a little there, and then you sell a little there or get stopped out there. But the point being, scale in, scale out, average up, not down, put hard stops in, and do it you got to do it, for example, under a support level. Here, when this stock, I'm going to show you something, folks. That was my stopping point. That was my stop. That was my stop, and there's my stop, and there, and there, and there. And it never broke the stopping point, and I kept raising it all day. This is what the favorite trade for me is what I call the cha-ching trade. Cha-ching, cha-ching, cha-ching. It never breaks support. You can let it ride all day. It's my favorite pattern. It's kind of like almost a 45-degree angle. And you'd be shocked, Ken, and I know you know this, but a lot of people don't realize when a stock pops and starts a trend, it'll do it all day. It'll do it all day.
Yeah, that's good points. Yeah. Well, Harry Boxer, thank you so much for being here. You're my hero. You're a rock star. You're one of the top 2 or 3 people out there in the world. The world should learn how to trade from, because you know your stuff cold and you're brilliant. So thanks so much for being here. Appreciate it. And maybe tell everybody about how they can learn more from you at www.thetechtrader.com. And you guys need to learn from Harry. He's really brilliant. Honestly, he's like, I'm a fan of Harry's, and I'm a hard ass. I'm a really hard sell. I'm skeptical about virtually everybody, but Harry Box, I'm a genuine fan and supporter of, because he's absolutely brilliant and he knows his stuff. So he's one of the good guys. So.
Well, thank you, everybody. And when you come into my site, just go to this box, put your name, first name, last name, and your email, and just sign up for free. 15 days free, no credit card required. Folks, I can't tell you how many people have come into my site for free for 2 weeks and said they made enough to pay for the whole year, and then some, and then some. Some people said 10 years. Because I don't charge that much. But what you get is day and swing trading alerts, live intraday webcasts. Folks, I'm on all day. I come on an hour before the opening and I go over my focus list and I show you the charts and I show you what I'm looking for. I have minute-by-minute analysis all day. I have a live trading room with hundreds of people in it and some pretty cool people, traders. It's I do nightly videos. Every night I do a charts of the day video. Every Saturday morning I do an hour-long webinar. That's called the weekend webinar. And there's so much involved in this site, and it's so much, and for such a reasonable price, I think you guys will be thrilled with it. And very few people that come in for 15 days and stick the whole 15 days don't sign up. It's kind of one of those things. We're at all-time record subscription level right now. And that's a picture of me right there smiling because I just made a good trade.
All right, way to go, man. Appreciate it.
Okay,
I'm a fan.
Ken, we'll talk to you soon. Thank you, everybody, for being here, and look forward to seeing some of you in the site. Bye-bye.
Thanks, Harry. Appreciate it, man. Harry's one of the people you definitely need to study. He knows his stuff. So welcome, everybody. Let's go ahead and get started with my portion of today's presentation. I always learn a lot from Harry, and I listen and take action to what he says because he's right. Anyway, let's go ahead and take a quick look here. Okay, can everybody hear and see my chart? Okay, let me give you an example of what Harry's talking about, like a 45-degree angle breakout in the previous day. UCO, one of the oil ETFs. Now, it did a pop and drop this morning. I had an order to buy in up at new highs, but it never did take it out. But this is a good setup. We got a 45-degree angle previous day's chart, then a small gap often runs up. Not 100% of the time, but frequently will. One of our charts of the day for our members was Disney, and that one did run nicely today. I called it long on the first sign of a breakout and ran all the way up to 130 on good news. And this is a gap continuation pattern with the bullish cup. So good to see everybody here. I see a question from Steve. Let me see if I can fill that. How do you manage multiple tranches on multiple stocks in one day? I use conditional orders. I use one triggers the other conditional orders. And what those are is when you get an order fill, let's say I put a buy stop in at 126, you also put in the order with either trailing or a hard stop to automatically execute or become live once you put on the trade. So that way, and this took me almost, I've been day trading full time now for 21 years, since 1999. And I've trained tens of thousands of traders. One of the things that I learned the hard way is you don't want to be like these video game kids out there doing low float, under $10 momentum, pop and drop crap stocks. What you want to do is a more professional approach. And I like to set my entries before the market opens. And I usually set a sequence of entries to capitalize on something that runs. For those of you new to working with me, I was the #1 rated author on stocks and commodities. Year before last, I've been featured in CBS Market Watch. My company used to be Day Trading University, but since I cover so much for swing traders, I changed it to Trade Mastery. You may have seen me as a speaker at money show events. Tax return proof, I actually know how to trade. And I've been featured in many different places. Today we want to look at how to find successful trades, looking at some of the strongest day and swing charts, and also do a careful look at risk management and scaling. And that's kind of it for the PowerPoint. So let's jump into the charts. Let me ask a first question here. How many of you are day traders? How many of you are swing traders? Or how many of you do both? Bum, 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 bum. Type in the word day, swing, or both if you would right now, and I can adjust the coverage of today's presentation based on the most number of votes. So if you would type in day, swing, or both. You guys remember when Novavax was $5 and $6 a share? This was a pick for my members in small cap scans. It was one of my alert services for things under $10 back earlier this year, right? Novavax, I said long over, I think it was like 625. It only ran to 180. And shame on me for not having listened to my own advice and trading it. That's my biggest failure as a trader is I'm a great shot caller like Harry, but I don't take all my own alerts, and I should, right? Anyway, Novavax, a lot of both. Almost everybody's both. Okay, only a few day and swing isolated. Good to hear it. Thanks to James, Harry, Greg, Glenn, Tim, Riani, Michael, Arnaldo, Lorenzo, Griff, Craig, Kirsten, and RP. Thanks. Anyway, Novavax, one could have done well with a chart like this. Now there's other charts. I like using the 6-month daily chart, and I like using the 50, 100, and 200 simple moving average because that's what most of the Wall Street guys use. So you can see Novavax is a great chart. Some other familiar faces like Moderna. That one's a little more haphazard because it's up and down. But again, it started off life a few months ago as a $20, $25 stock and it tripled. INOs ran nicely. DraftKings, booyah. Gaming stocks coming up nicely off their March lows. I was trading PIN and MGM. This is DraftKings. It's pulling back, but if it breaks back over that 36, the 50 SMA, it may be worth a shot for an upside breakout. You look at some of the other directional charts that have good volatility, like PIN. What I like about this guy is PIN Gaming, a casino stock. I bought it back there, it was under $10 a share, and I sold way too early. How many of you sell way too early? Because when it was getting up near 16 or so, I said, hey, that looks like it may pull back and drop back down again. And so I traded the first breakout, the first bounce successfully, but I didn't hold on to it for month after month here in the summertime during the chop. Now, what's good about this chart is it's testing resistance up near 40. So again, from 4 to 40 in just a few months, PENN makes perfect sense to look at. And trade potentially over 42. Here's another one that one of my smart traders, and I've got a lot of them. My room has been popular. I founded it back at tradingtheopen.com. My live room is tradingtheopen.com, and you can join me for 3 weeks for only $7. So close to free, just $7 for 3 weeks at www.tradingtheopen.com. And we cover mainly day trades, of course, but mostly we cover day trades for stocks in the $5, $10, $15, $20, $30 a share range. But occasionally we also cover swing trades for charts like this one. KL, a great chart. It came off its earlier lows from 20, currently up near 58. One of my smart traders had asked me about run. And after a really strong run up, it did a pullback and then it resumed its uptrend with exciting upward force today and yesterday and the day before. Now here's a pattern that I want you to learn, and that's where you have a small candle followed by a large whole row body candle. And oftentimes that pair of candles leads to a big explosive breakout. So here you can see a small candle followed by a large candle. Or here a doji, an undecided candle followed by a large candle. When you see that pair of a small followed by a large whole row body candle price action, it was good. Hey, Glenn said PIN, he was in and out too, looked at it around 5 and didn't get back in. Me neither, buddy. That's one of my biggest challenges. I trade so much, I frequently don't keep track of everything that I used to trade, and when they do take out new highs, I usually miss them. So that's why I like having a team of people to work with in the live room, is they remind me about these things. Anyway, this is RUN. Run, run, run. Zoom, zoom, zoom. I got to take a look at the day trading chart. Wow, puta madre, I did not trade this myself. Son of a gun. Well, it's on my radar for tomorrow. I think this came from one of my best stock picker traders, Vlad. I mentioned this guy, RUN. And after a pullback, it's still good for more. Like Harry, I completely agree, and we're both two pretty smart cookies in the bunch, sharp pencils. We know what we're talking about. 45-degree angle breakouts rule the stock market. You want these charts. Look at the day-over-day price action. 45-degree angle yesterday. It kind of chopped around in the morning, but the afternoon it did a nice breakout over 43.50, ran all the way to 46.50. Now this is an example of not a picture perfect day trade, because I like charts that run up right after 9:30, but for a late day breakout, this has a really clean directional chart. One of the most important tips I will teach you, and you may have seen me write on this in Stocks and Commodities magazine, which I highly recommend you all register for, so you can read my monthly Trading on Momentum column at traders.com. One of the best things to look for is the following. How many of you get pissed off at taking stop losses? I don't really get pissed off. I'm just like, oh, really? Another one? Okay. It'll be the next of the next 20,000 stops I take. That's okay. The number one rule of thumb to stay out of false breakouts and to minimize stops. Number one, don't buy right over obvious resistance. That's dumb money, right? Wait for at least 20, 30 cents above the obvious high before you go in long. Again, I realize this is a late day breakout for today, but the first thing is never buy resistance. That's dumb money. Okay, don't buy unless something's run at least 20 cents above the prior day's high. The other rule of thumb is this: no end days allowed. Never trade anywhere, any place where something is inside the previous day's high-low range. Because you always see volume spike, like right here on the 2-day high breakout. That's because high-frequency trading algos kick in. Unlike the first fake out, this one actually got legs. And a typical long call for me, yet I've been following this, would be something like 44.20, 44.30 for the breakout. So you have a false breakout filter right above the obvious high, so you don't go in there. But once it does prove itself and start to run up above the prior day's high, that makes for a good play. Please remember that. You have my word. If my life depended, seriously, I shit you not, if my life depended on me helping you make money as a trader, that's the number one rule that I would have, is thou shalt not buy stuff that's inside the prior day's high-low range. For validation and proof of that, go over your last 20 or 30 stop losses. And I won't say guarantee, but I'm very confident that the majority of stop losses are either counter trend, like you tried to buy something that was down in the muck and tried to bounce. That usually doesn't end well, or more pervasively. And it's very difficult for traders to get away from this, but do not trade inside charts. And the reason is high frequency trading algos kick in buying pressure when, Boolean operators, if current price is greater than previous day's high, then you buy. So always think like that. The price is above the prior day's high by at least 20, 30 cents, 50 cents or better is even better, then it makes for a good breakout. Here's a good example of a gap runner. It gapped up here to 55. I called the long at 57 and I had people exit at 59. Then I called the rollover short on the way down, and that worked out well. And for experienced traders, that's one thing you can do. If you miss the first breakout, if it's a near straight angle horizontal line or vertical line straight up, often those will drop to at least 50% mean reversion or 50% retracement. So that's another chart pattern to be on the lookout for. Now here's an example of a chart INO that started off choppy. Now I would not have entered in here, and I typically don't like entering in the afternoon, but a trigger point for this would be, say, 21.20, 21.30. Now to Harry's point too, if you use trailing stops, often you get shaken out of the trade, and then it runs up without you. So do have a tight initial stop, but for charts that are not as clean, like this guy, it's not nearly as good as the other chart that I covered in just a minute ago. If it's a choppy, shaky chart, those are much tougher to trade. The cleaner the chart, the easier it is to trade. So charts like this that have you want a chart to look like a 45-degree angle breakout of a piece of string or yarn or cord that's been tied tight. That's so easy to trade, and you can scale in every 50 cents or 70 cents in a chart like this. And I agree with Harry's point, that's how I trade too, is I will usually do anywhere from 2 to 5 trades per instrument on a breakout. I will never, and very seldom I should say, not never, but very seldom do I take a single shot at a stock, because for the rest of your life as a trader, deal with the fact that you are going to get stopped out more than half the time in your trades. The challenge I have for you is, how do you still make money doing that? And the way that I do that is scale and position size. So you never add to a losing trade, you only add to winners, and you scale in progressively until it runs out of steam and pulls back. Another quick tip is to always make sure to use whole numbers. Whole number support and resistance. Like you can see today, 41 was support, 44 was a breakout trigger, and it ran all the way to just over 46. And so whole number support and resistance is another key strategy. Now this kind of chart's ideal for day trading because it's got over 10% run on the day. It ran from a base of 41 to a high of 46.50. And even if you waited like I would have till say 44.5 or so before entering, you still have a nice tail from a breakout. Another pattern to look for is embedded ascending triangles. If you do trade inside charts, this kind of pattern where you've got an ascending triangle, you kind of connect the dots here. This is an internal kind of a bullish cup / ascending triangle. A breakout right above that makes sense. So if you are trading inside charts, make sure you've got either an ascending triangle or a bullish cup or some strong reason to put on the trade. So if you put on the benefit of this approach is put on the trade here, you put a hard stop right there. So it's pretty close. When it comes to setting your stop losses, let me give you another insight. Always ask yourself, what's the price that proves a trade wrong? So you make the call. If we had collectively bought at, say, 44.20, where would you put your initial hard stop? Alexa. Never mind. Where would you put your hard stop? A good point, Glenn. So this is an audience participation portion of this afternoon session. If you bought 44.20 for a day trade, where would you trail, or where would you set an initial hard stop? A loss of where? Where's the price that proves the trade wrong? By the way, abandon all hope ye enter here. If it loses support, watch out below. Do not hope that it'll bounce. That's really stupid thinking. You've got to be like Spock, very unemotional and very disciplined. And the way that I do that is I use the one triggers the other conditional order flow. So that way, when I put on my trades, it will automatically get me out if it drops. Well, thanks. Lots of answers. Thanks, Faisal, Karsten, Craig, Tim, Glenn, Greg. Seeing 43.20, 43.48, 43.50, 43.7, 44.44. I would use personally 43.30 or so, right under the price. The reason that I bought this or would buy this breakout is that it ran up above the previous day's high resistance. Okay, so the reason for the trade is it's somewhere above here. Like if this is the ocean, it's above the ocean water. Now, if it gets underwater, it goes. I used to live in Hawaii for nearly 10 years, so I'm here in Colorado now, but I miss the tropical beaches. Anyway, this guy gets back underwater down here. That's the price that proves that initial breakout trade wrong. So if you buy 44.20, the sell trigger would be, say, 43.30, 43.40. Somewhere right under the 43.50 would be your maximum initial stop. Does that make sense? You don't want to just give 10 or 20 cents, but neither do you want to give it all the way down to 41. You're obviously not going to take a multi-point stop on a day trade, so I'm going to play relatively tight. Now, one successful trade I made this day was a bounce and dust. Here's a quick arbitrage play. And I got stopped out in GDX gold. I bought 45.7. Wouldn't you know, I bought the high of the day. Pisses me off, but I took a really small stop, and I also have a hedge. This is a hedging strategy that I teach in the live room for ETF traders, is whichever pair of instruments, in today's charts, GDX and Dustward. The GDX breakout attempt crapped out. I still think 45.7 looked like a perfect place to buy, right? That was a good setup. 45-degree angle breakout, minor gap continuation, and I bought there. But I got stopped out on the way down, and instead, or in addition, I should say, I bought and traded profitably dust as a hedge. It goes up when this guy goes down. Notice the mirror image. Dust has the exact opposite. And I bought the bounce in this guy on the way up, and I sold, I think it was 16.20. So I squeezed maximum, close to maximum profit out of the trade buying the pivot. So that's another strategy that's available to you. You may have seen my stocks and commodities article. I call it ETF arbitrage, but actually hedging is a more accurate phrase. But same kind of thing. When one goes up, sure, you take the shot. And I did at 45.7, but as it started to drop, I took a stop loss, and so I also had the order in to buy the bounce and dust, and that did good for me. So what you're doing as a trader is really trying to figure out how to bulletproof your trades, or at least this paired approach is the closest thing I have come up with a way to trade both sides of the fence, kind of like going long and short simultaneously, but doing that with different long versus inverse directional ETFs. Now today was a do nothing stock market day today. Don't be misled by the talking heads on TV. We had a rally day on Wall Street. No, Sparky, we had a gap up, sideways, choppy as a pancake, do nothing day on Wall Street. Does that make sense? Don't be misled by the talking heads if you're looking on financial news websites and markets set to rally as the Dow skyrockets hundreds of points and blah, blah, blah. No, the story of today was a story of nothing burger. The market gapped and promptly just crapped sideways and didn't go anywhere. We've seen that repeatedly. That's why you really need to have help from folks like Harry and myself and whoever else you may want to work with. It helps identify charts that are exceptional runners, like Disney was for us today. Now, usually I prefer to focus on things that are more affordable, down at 15, 20, maybe 30 or 40 bucks a share. But this was an exception because it looked like it was going to make a nice run, and it did. It ran all the way from 123 to 130. So it did a 7-point run. We nailed a few points with the live calls for our live room members today. So in a sideways as heck market, you really want to focus on charts that are running strongly despite it. This actually will be a favorite for me tomorrow to trade. I will trade this myself in my account, so we'll see which way run goes. Does it gap up or gap down? We can't predict. We just react. It gaps down to 43, 44, which is very possible. I may buy a breakout over 45. If it gaps up to 49, I'll buy a breakout over 50. Either way, I'll be thinking about it tonight. You can tell a trader we have no life. We spend our time obsessed over our charts and the making of money out of the chart patterns approach. And so charts like this are ideal for trading because you could scale in without getting chopped out, right? See, the toughest thing about day trading is the damn choppiness, right? You get in on a breakout like I did GDX, and oops, that was a high day, and it sells off promptly. So you take a small stop, you trade something else that goes up. The goal is out of a sequence of trades to make it all profitable. Let me give you a quick tip. When it comes to day trading, do not day trade after 10:30 unless you're in a 2-day high rally, rare 1 out of 100 days in the market or something like that. But for 98%, 99% of your day trades, I will often start day trading pre-market. If something has a gap runner, I may start trading as early as 7 a.m., 7:15 or so usually. I give it a few minutes there. I don't, unless I'm really eager, I don't trade right at 7 a.m., but I do start trading around 7:15 with some small pilot trades and then scale in later if they work out. And if they don't, I take small stops. But as a day trader, and Harry was exactly right, and he's so brilliant. I'm a big fan of Harry's. He's smart. You don't put on the whole trade at once. You don't put on 1,000 shares of something and hope for the best, because even a dime is $100, and 50 cents, which can happen in a blink of an eye, you're down $500. That we don't want that. So instead, I'm a big fan of trading odd lots, maybe 20, 40, 50 shares. but I may do as many as 40 to 60 trades in a day, or as few as, like in today, just a dozen. But do consider the fact that, especially if you're in America and you're fortunate enough as I am to get zero commissions, why not take a lot of small shots? That makes a lot of sense. Like my colleague Tom Sosnoff, who's also brilliant. I'm a big fan of Sosnoff, says, trade small, trade often. I say trade wide, not deep. They're both correct. That's what you want to do. Trade a variety of instruments, no more than 4, 5, 6 maybe in a day. You don't want to spread yourself too thin, both from a capital and an attention perspective. But do consider each day's adventure, each journey, like Indiana Jones. Bum ba dum bum, bum ba dum, bum ba dum bum, bum ba dum bum bum. You're going through the Temple of Doom here, and you're trying to pick your way carefully among the traps without getting skewered or barbecued or shish kebabbed or whatever. And as a trader, you owe it to yourself to plant traps. You know, that's how I trade. It's like planting claymore mines or spider webs or whatever you want to call them, little technical traps to capture price action moves. Usually 2 or 3. That's my goal. Is usually 2 minimum, and maybe up to 4 or 5 maximum. But usually 2 or 3 trades per instrument that I'm hot on trading. And that way, even if I get stopped out of one and shaken out in another, hopefully the third one's a term and it makes money for me. Or vice versa. Maybe I get stopped out in a break-even trade, then another break-even trade, then a small win, then a stop out, but then a nice medium-sized trade, and then another medium-sized trade, and then I'm done. And I've still made money because the wins of the bigger gainers are bigger than the stop out, break-even exits, or small stops. So I'm a big fan of very conservative, very small-sized trades, but do a lot of them. And in a commission-free environment, it makes a lot of sense. Any questions? If not, I'm going to wrap up here in just a minute. But I wanted to thank y'all for being here. And special shout out to Harry Box. It's been a year and a half since I've done a webinar with Harry. I miss the guy. He's really smart. I like his personality too. I like him as a person. Anyway. You can get a couple of ebooks. Now, it doesn't look like this now. I expanded it. At trademastery.com, there's a free membership site where you can download this PDF for free. It used to be on Amazon. Now yours for free. And what you will not see is this portion. So ignore this. And it looks pretty cool, but anyway, ignore that. You can get my swing trading ebooks and videos and join the free section of my website at trademastery.com. You can just scroll down to near the bottom of the page and there's a join free button, and you're certainly welcome to join Trade Mastery and take a look around and download a couple of PDFs and take a look at what's going on. Now, if you're a day trader or an active swing trader, do be sure to join my live room at tradingtheopen.com. Greg's asking, do I say to stop trading after 10:30? Yeah, East Coast time, right? Question from Rollo, what are the basic differences between my swing and day trades? Well, I use a 2-day, 1-minute chart for day trades, and I use the usually the 90-day daily chart for swing trades. And for swing trades, the main thing I'm looking for, as with day trades, is consistency. Because whether you have a consistent day trading chart like this or consistent swing trading chart like that RUN or Novavax, there's a lot of upside. So yeah, good charts. Hey, Karlik saying how to handle news like TDOC, LVGO as a swing trader. A small size, because bad news. I'm not a big fan of swing trading. The more experience I get, the more I realize you start off really small. But even, what I found in my own experience, like I was buying Penn Gaming off and MGM off the March lows, but I just sold it too soon at the first sign of reversal. I didn't scale in later on breakouts. But the way to swing trade and hopefully mitigate the impact of earnings gaps against you or bad news or whatever is to trade really small incremental positions of under, say, 50 shares or so at a time, and then scale in every couple 3 points over time. That way your average cost basis is relatively low. And that way, if you have negative news, hopefully the news doesn't gap it under your average cost basis. As opposed to if you put on an all or nothing trade, that can get expensive if something gaps against you. So, what's your thing, Carter? Can. And that took me a lot of years to figure out. If I were to go back 20 years, wind back the hands of time, I used to trade, when I first started trading, it was usually 200 to 300 shares at a time. Blew up a couple of accounts and got pissed off. What I learned in subsequent testing, and my most profitable years have been those in which I have done very small size, but a lot of trades. So that way you're kind of mitigating your risk on the front end, making it prove itself. You're playing with the house's money and scale in over time. So makes a lot of sense. Any other last questions? If not, I'm going to wrap up, friends. But thank you so much for being here. I do appreciate it. Listen to Harry Boxer. You have my word. If my life depended on me helping traders make more money, Harry Boxer is absolutely on the short list of like the top 2 or 3 guys I would send you guys to. And myself, I know a few things as well. Harry and me are Harry and I, I'd say the 2 best of the breakout traders that I've seen out there in the industry. So learn from both of us. And what you'll find is that a lot of points that Harry makes and I make overlap, which is good. You should pay attention. Whenever you have 2 stone cold market experts who know what the blank we're talking about, listen to areas of overlap. And you may refer to my articles in Stocks and Commodities, refer to Harry's book. Be sure to buy Harry's book, by the way. It sold out in minutes back at the New York Traders Expo. Harry and I were both speaking there at the Money Show event, and Harry had a whole table full of books that he brought, and they sold out in minutes. Anyway, he's a great guy to learn from. Hopefully I've earned your trust as well, and let's power on and try and make bigger winning trades more often a way of life. So thanks so much for being here. I do appreciate it. And thanks, Greg, saying impressed. I appreciate that. Hey, Lorenzo. Hey, Kirsten. Hey, thanks, Faisal. Yeah, it's only $7 via PayPal or Visa MasterCard for 3 weeks. And if you want to join for a year, I've got a special in the live room. It's only $9.97 for the year. So that puts the monthly price under $90 a month. So that's a really good value. And I've got the live room on sale. So what I would encourage you to do, try Harry's room at thetechtrader.com. Try my room too. You could join both because neither one is too expensive. And try us out. But anyway, my live room is at tradingtheopen.com. So best wishes for success in your trades. Stay safe, and have a great rest of the week and the weekend. And I will see you guys when I see you. Take care. Bye for now. And by the way, I will get this video up on my YouTube channel, youtube.com/trading television. I should have just called my channel Trade Mastery, right? But anyway, Trading Television is my YouTube channel. So I will get this video recording, assuming it works properly, up on that channel either tomorrow or the next day. So do be on the lookout for that, and I'll see you guys next time. Take care and best wishes. Bye for now.